Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me live at MarketSite is Will Dove. He's the chairman and CEO of Extraordinary Re. And I'm excited for this particular hit because we're going to talk about insurance-linked securities. It's the first time that we've had this on Trade Talks. Well, thank you very much for joining us today.
Thanks
Super
for having
excited
me.
about this one. So tell us about Extraordinary Re and what it offers its stakeholders and institutional investors.
Certainly. So over the past 20 years, the insurance-linked securities market has grown from a cold start to nearly $90 billion market. But it's still limited today to certain types of natural catastrophe risk, principally hurricanes and earthquakes. And Extraordinary Re aims to deliver new types of insurance risk to those investors and will enable it by providing access to highly granular data and real-time risk information.
So why is this attractive to traders?
So every insurance policy is priced with an expected profit margin to be earned by the insurance company. But expectations change over time, creating the opportunity for active trading. And the factors that cause insurance claims to vary above or below the average are unrelated to the factors moving other financial asset classes like equities, commodities, or fixed income. So insurance liabilities are attractive to traders as a low correlation asset class.
So what makes this particular product from Extraordinary Re differentiated from competitors?
So there are really three things, Jill. First, we can give our participants access to types of risks that they can't see otherwise in the insurance-linked securities market. Secondly, we allow our participants to access risk in a familiar form and to dynamically manage their portfolio through our risk allocation system. And then finally, we enable access to highly granular and real-time information, often better information than even traditional reinsurance companies can get access to.
Now, is there the potential to create package products around insurance-linked liabilities?
Oh, absolutely. And as Extraordinary Re expands the set of insurance risks available to institutional investors, it will enable asset managers to create packaged products for retail investors. And we will also, over time, be able to produce new types of indexes and other kinds of market data products.
And so what would the advantages be to insurance and reinsurance companies through these products?
So for insurance and reinsurance companies, Extraordinary Re allows them to share the risks that they underwrite across a huge pool of capital from institutional investors around the world. And the buying and selling activity through Extraordinary Re's risk allocation system, powered by Nasdaq technology, will enable and create price discovery for kinds of insurance products where there is often little historical data available. And this kind of market data will be highly valued by insurance companies.
Now, I'd also imagine, to wrap up here, that there's advantages to agents, brokers, policyholders.
Yes, there certainly are. So for businesses and consumers who rely on insurance to protect their assets or their livelihoods, Extraordinary Re will expand the pool of capital that's able to bear that risk. And over time, this will increase the availability and decrease the cost of insurance in the same way that we've seen with other financial products like mortgages and credit cards in recent decades.
All right. Well, thank you very much for joining us at MarketSite. And traders, thank you for joining me as always. I'm Jill Malandrino, global markets reporter at Nasdaq.